from L&W Insurance Agency, and we are back with Ask an Agent. I know you've missed us, so we wanted to come back in with a bang, which means that luckily today we got our VP and all-around insurance guru, Ed Brown, here to help talk to us about a topic that comes up pretty regularly. It's flood insurance. And flood insurance is personal, but it's also commercial. So today, Ed's going to help walk us through a little bit about how commercial flood insurance can affect your business and what you need to know about it, because flood insurance is tricky and it's always evolving, and guidelines and rates are always changing. So you need someone in your corner to help walk you through those changes and make sure that you're protecting your assets in the best way possible. So we're going to start easy and just go back to basics. What is it that defines or differentiates a flood from just a regular water claim?
So flood, you have a pipe burst in your house, that's a water claim. You have a sump, your toilet back up, that's a water claim.
Got it.
If you have an ocean, a bay, your retention pond in your development, they all rise up. Rising water. Rising water is the key. So that's what that's flood. That's what you need a flood policy, because most P&C policies will not cover flood.
Yeah.
Rising water.
So and to that point, they don't cover flood. So you really need to make sure that you're in tune with what these policies can cover and what they can do for you. So if you are thinking about commercial building or a condo building, these are typically more valuable than, say, a personal policy, which we've talked about personal flood before. So if you have these buildings that are more valuable, oftentimes more sturdily constructed, did I say that right? Sturdily constructed, and mortgage companies are the driving force that typically enforce flood insurance. So you could be sitting out in a high-rated zone, and as a reminder, all addresses are in a flood zone. You may be a higher risk versus a lower risk, but everybody is in a flood zone. And so if your mortgage isn't forcing you to get insurance or flood insurance because you're in a higher rated zone, you may not know to get it, or you may not have any push to get it. So with commercial buildings and businesses, is there really an incentive or a reason to get it if there's no mortgage pushing you to do it?
Absolutely. So you touched on a whole bunch of different things. So commercial buildings, you're limited to $500,000 for the building. How many commercial buildings out there are actually worth more than $500,000? Because your mortgage company, if you have a mortgage, is only going to require you to have that. But if you lose that in a flood, you only get $500,000 to rebuild your $1 million building. So one of the things you want to think about is excess flood. Excess, people think, wow, that must be real expensive. It tends not to be, because the excess or the primary policy, the $500,000, acts as a deductible on the excess. So it tends to be rather inexpensive.
Reasonable.
Now, why should you get it if a mortgage company, or if I don't have a mortgage, why should I get it? I'll give you an example. I think about 4 or 5 years ago in Maryland, I think it was Bel Air or somewhere in there, they had like 12 inches of rainfall in like 2 hours. And then there was a flood raging down this river, down this street, which was Main Street, which was not in a flood zone, which was not in a flood zone which required flood. There were lots of claims.
Oh my goodness.
You can go all the way back to Katrina in New Orleans, where people were flooded 15 miles inland and they weren't required to have a flood. So you should always think about it and make that personal decision of whether or not you want to protect your property with a flood policy.
Well, and that's the thing, is they have these flood zones and they can indicate to you the likelihood and the probability of a flood, but that's not foolproof. And so anybody is open and runs the potential risk of a flood experience happening to their business or their home. So with that being said, flood insurance as its own entity is always changing, always evolving. MACs are changing, guidelines, rates, everything is always coming up. So we just had a new one roll out recently with some changes. It's the Risk Rating 2.0. So what can you tell us about this new version of the flood that we should be aware of?
Very little.
Very little.
So we're still learning it. So this Risk Rating 2.0 or Flood 2.0, whatever it's being called now, it only affects new business October 1st.
Okay.
Renewal business won't be affected till 4/1.
Okay.
What they're trying to do is rate risk. So if you're currently paying $2,500 for your flood policy, but it really should be $5,000, that's what they're trying to get to.
Okay.
They're using a third party that has somehow mapped all the buildings, the elevations and stuff, so you can actually get without an elevation cert. That's one of the things we've seen.
And I feel like that's a new kind of
Yeah,
development over the last
correct.
years.
So that was something new. If you have an elevation cert, it can certainly help. And I can give you an example. We just had this. We had a condo building. It was in an X zone, so
Okay.
it wasn't required. But they had three other buildings that were, so they wanted them all covered. So we had the X zone in the private marketplace.
Okay.
So we did a new flood quote and actually saved them money, because when we ran it, we did it without the elevation cert just to see, and then we added the elevation cert and it actually saved them money.
Oh,
So having the elevation cert can still save you some money, but you can get it without as well now
Okay.
too.
And so that's definitely a new trend that, again, with everything evolving and changing, elevation certificates used to be the gold standard. You had to have one in order to get flood insurance, but they've definitely evolved over time. So it may help you, but you also can get flood without it. So there's just a tidbit of,
The other big thing is 18% increase.
yeah,
Is
that's
the
a big deal.
is the max that they can charge you. So back to the example, if you're currently paying $2,500, but the risk rate is actually 5,
Yeah.
and we've been told we won't be able to know that. So they will increase your flood policy 18% until they get to that risk rate number.
Okay. So
So-
every year 18% until they get there.
Correct.
Okay. So a lot of changing.
Yes.
A lot to navigate and kind of wade through, pun intended. And so I think that it's really crucial that you have people in your corner like Ed who are willing to do the research to learn about all the new programs, the guidelines, the rate changes, and be able to help walk you through that and navigate those kind of muddy, rough waters. And so I said it.
Rising waters.
The rising waters. So if you ever have any questions, you know where to find us, L&W Insurance. Ed, thank you so much.
Yep.
And I hope you all have a good rest of your weekend.